This is the tax platform informing the nation on tax matters. Good day. We continue with our series on withholding tax, and on the last but one episode in relation to withholding tax, we'll be focusing on withholding tax on royalties and management fees this week. But before we can go on today's subject matter, it was a budget speech week. So before going into withholding tax on royalties and management fees, we will touch on the highlights from the budget speech when it comes to upcoming tax amendments. Starting with the Transfer Duty Act, it is currently under review to limit circumstances that a valuation report will be required for purposes of claiming transfer duty exemptions. One will know that for you to claim any exemption, or best give you a clearance letter, you need to submit a valuation report with the declaration form at BURS. Now going forward, you might not need to submit a valuation report when claiming some of the exemptions. This could be in a case where you are inheriting the land from someone and then you are exempt because of that inheritance, or in a case where you are being allocated a plot by the land board and you register it. So that's what you can expect. Of course, there is an issue of the 30% rate that is applicable to non-citizens. That will probably go down to 5% also, or be limited to the rate of VAT, or even less than that. That is between 5 and 14%. Apart from amending the Transfer Duty Act, the VAT Act will also be amended, particularly the schedule relating to zero-rated goods and services. Among the services that will be zero-rated will be the private medical health. Private medical health has been subject to VAT at the standard rate, whether it's 12% or 14%, while public medical health was exempt from VAT. So now private medical health will be cheaper to provide. So we would expect that for those who have been paying VAT and maybe 10%, you'll start paying less, or you start paying nothing, and the medical aid will handle the rest of the fees payable to the hospital. Zero rating of public or private medical health actually will result in reduced revenue for government, because those who are in private medical health will claim refunds because all their services will be zero rated. So the government is sacrificing revenue so that you as an ordinary citizen out there can access private medical health at a cheaper rate. So apart from private medical health, sanitary pads, baby diapers, and infant formulas will be zero rated. Now you will know that the zero rating of sanitary pads has been approved as a motion in the past, and now we'll be seeing the implementation part of actually ensuring that VAT on sanitary pads is removed. So now we can no longer hear about pink tax, as there has been some that believed that they are being taxed simply because they are women. But that's a story for another day. And yes, for those who are now having babies or want to have a baby, you'll get your diapers and your infant formula cheaper than what we are getting today. And the zero rating list will be reviewed comprehensively, and some of the items there will be removed from that list. So we await the bill for VAT and the bill for transfer duty so that we can break them down regulation by regulation or paragraph by paragraph in the next upcoming episodes. Now going into the subject matter of the day, starting with withholding tax on royalties. Now you come to understand that royalties are often paid to copyright holders or those who own trademarks or those who own brands. They can be paid to musicians, songwriters, those who have franchises, some in the manufacturing industry who have products, and you pay royalties to them. So if you are paying royalties to non-residents, the payment that you make out to them in relation to whatever brand, trademark or copyright you are using, you need to withhold tax at the rate of 15%, which is the general withholding tax rate for withholding tax on royalties. This rate can go as below as 7.5%, depending on the country that the business that you are dealing with comes from, or the copyright that you are using comes from. So it depends on whether we have a double taxation agreement with that country. So if you are paying royalties in Botswana or within Botswana for a franchise, for a copyright, for anything else, it is not subject to withholding tax. This withholding tax is only applicable to non-residents. That's those who come outside of Botswana, and it is a final tax. They do not have to file any returns in Botswana once they've paid that 15% or 7.5% or even 10%. Now moving into withholding tax on management fees. These are largely paid to consultants who are based outside the country. A consultant may be sitting in South Africa, in UK, in Ireland, and comes and does work in Botswana or does work for you wherever they are, and then you pay them for those consultancy fees or for those management fees. Whenever you pay, you need to deduct 15% depending on where they are. Sometimes it can go as below as 5%, depending on if we have a tax agreement with those countries and they get a reduced rate. So this is also a final tax, and it is not applicable to resident companies. I hope that was insightful. Continue to follow us. We are available across all your favorite podcast platforms. Remember, this is the tax platform, informing the nation on tax matters. Good day.